समझ नहीं आ रहा अपने सैलरी इंक्रीमेंट का क्या करूं।
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स के एसआईपी का टॉप अप करा ले। दिस इज द राइट टाइम।
क्या समझ में नहीं आया?
बेटा इतना क्या सोच रहा है? अपने म्यूचुअल फंड्स का एसआईपी टॉपअप करा ले। दिस इज द राइट टाइम।
अब समझा।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
The union budget this year got presented on a Sunday, and that's the reason we have this special episode of Cut the Clutter for you. Of Nirmala Sitharaman's 9 budgets so far, this shows the least political anxiety. That's the first high point, the least political anxiety. Yet, the second high point, yet it is a budget designed for geopolitically most anxious times. Here is how we square these contradictory statements, or what sound like contradictory statements: lack of anxiety and also anxious times. There was much demand and advice from corporates, investors, and establishment-friendly economists to risk loosening up, take advantage of the super low inflation below 1%, and drive nominal growth, print more money, sell some assets, cut capital gains taxes, and assuage estranged foreign portfolio investors, FPIs. Mostly, the contrary has been done. The Securities Transaction Tax, most of all STT, has been raised by 150% to cool the markets instead of firing them up. This is political as well as ideological and philosophical. The political part first. The reason we call this politically the least anxious budget is that it has no new giveaways, tax cuts or exemptions for the middle class. Allocations to the states, if anything, have been curtailed marginally, and they're also linked to capital assets, building of capital assets. There are no favors done to any allies or to own states whatsoever. This absence of electoral anxiety shows in nothing being on offer for the states going for elections this year. This is political confidence. Like it or not, depending on which side of the political divide you are, this is political confidence. The government has shaken its post-2024 jitters. It knows its vote bank is intact. Of the 4 major states going to the polls this year, it believes it has one in its pocket, that's Assam, is marginal in 2, if at all, Tamil Nadu and Kerala, and West Bengal will be fought purely on polarization. And even if any Calcutta rich are hurt by the budget, they would vote for the BJP anyway. The budget has indeed woken up the sleeping markets, just not the way its fans would have expected. The tough F&O action, that is futures and options action, and subsequent finance ministry statement that this was done to curb speculation is what we call both ideological and philosophical. Ideologically, the RSS has had a paternalistic and patronizing view of the middle classes. Since they are hardworking and talented, but not always the smartest in the markets, they would need to be protected by the state, sometimes from themselves. This is the ideological view. Philosophically, there are questions over algorithmic trading, where losers are simple millions of people and the winners often distant hedge funds with smart guys in their $200 Hermes ties who game the algos or algorithms. This was the Jane Street phenomenon. One hedge fund based overseas, apparently SEBI has provisionally stopped it, this trading pattern. It had a company in India that would allegedly drive up prices of a stock with small buys in the morning, and the overseas parent would start shorting it in the afternoon. The system only woke up when its profit was approaching the $10 billion mark. How many lakhs of underemployed Indians, retirees, even housewives would have to lose their hard-earned tens of thousands each to add up to these billions? The government did not like it and said so explicitly today. But it saw the downside in stopping F&Os altogether, because this is, after all, a globally accepted market practice and route to price discovery. Hiking STD on each transaction 3 times, 3x, is simply a case of throwing sand in the wheels. If it will infuriate the FPIs, So be it. Modi government won't bother. They'd rather that the FPIs return as patient investors in the India story. This distinction between pure trading and investment is the philosophical point. Let's call this the Jane Street Amendment then. This will, however, hurt this government's favorites, the middle classes. Over 2 years, as the FPIs cashed out and net FDI turned negative, the slack was picked up by domestic individuals buying SIPs. The finance minister has spoken with pride about these millions of brave Indians investing in systematic investment plans or SIPs, as we call them, unmindful of what was happening in the market. By December 2025, individual Indians owned more of the NSE stocks than FPIs. Will they take this fresh setback on their chins? This is a political risk for the BJP, and I am sure many in the investor community and FPI community are hoping that the BJP government will lose nerve and re-amend this or maybe withdraw this. We don't know what will happen. Markets have leverage, but the government seems firm as well. Politically, the government is confident, calm, strapped up for the long term. The metaphor strapped up is deliberate as we switch to our second point. This being a budget also for times of great geopolitical anxiety. A bit like the airline captain, asking passengers to keep seatbelts fastened as we are passing through turbulence. Nobody knows what Donald Trump's next Truth Social post would say. If war with Iran will resume, or will there be a truce? Will there be a settlement in Ukraine or hardening of postures? The future of the tariffs, oil prices, what to make of the purges in Chinese military top brass? Who will be in power in Bangladesh after the elections? When will Asim Munir become insecure and desperate and be back at our throats again? This is a lot of global and neighborhood anxieties listed in just one paragraph. All of these provide good enough justification to play safe for now, to retain the fiscal headroom, build export competitiveness to take advantage of the markets that the new FTAs will now open up. That's why the most welcome, if expected, shift is in defense budgeting. After 11 years of remaining frozen at around 1.9% of GDP, the budget has gone up to 2%. I've been writing consistently that India needs to just increase the defense share of GDP each year by 10 basis points, that is 0.1%, until we get to 2.5%. This year's increase is exactly that, 10 basis points from 1.9 to 2% of GDP. Even better, this is the first year in 11 that the armed forces have spent their entire capital budget. 1.8 trillion rupees was budgeted and revised to 1.86 trillion. They've spent all of it. In each of the preceding 10 years, they've been returning monies unspent. For FY 2024-25, the amount that's returned unspent was rupees 16,000 crores or about $2 billion. Those spending shackles or absorptive capacity, lack of absorptive capacity, an expression current Defense Secretary Rajesh Kumar Singh has used, those constraints have now been shaken off. This is the good Sindoor shock therapy. This budget is a politically confident government's super cautious move for turbulent times. You find it boring? Weren't we told that boring bankers were always the best?